Hello, everybody, and welcome to another episode of Gold Rush here on Stock Market TV. And today we have an extra special guest for you, my good friend, Latin American correspondent, Slick Rick, calling in from Mexico City to join myself and Jason Pers here. For those of you that are not familiar with Rick, he works with us at All Star Charts Gold Rush. He has a big focus on currencies, and of course, as our resident Latin American, he covers a lot of Latin American equities, and he's one of the best people I know at finding just these weird, obscure names out there. Like, he was talking to me earlier today about some obscure European energy stocks. Few people in the world look at as many stocks as Rick, and just
It's
charts
such a
in
big
general.
compliment. That's a
But
huge compliment,
one of the
Sam, and
most
I'll take
talented
it.
technicians I know, no doubt about it. So thank you for
In
joining
this
us today, Rick.
business, in this business and in this company, getting the where did you find that stock? In a company where people look at, every single stock imaginable is such a good compliment, and I'll take it. It's a
Totally.
pleasure to be here.
I hope you'll join us more often
Yeah, I
here at
will.
Gold Rush. And everybody, if you are watching this on Twitter, hop on over to the YouTube stream so you can chat with us, and don't forget to like and subscribe so we can continue bringing more awesome content like this. But we have a lot to discuss today. We got started a bit late. We had another meeting before this. We had, people that pay us, we'll give them extra time, but you guys, you got to pay us to get our extra time. So let's get into it. Rick, you brought this first chart today, a really interesting chart. There's a lot of war charts going around Twitter right now, but nobody marked up a crude oil chart just like this. So tell us what you did here, and tell us what you think it means for the future.
I mean, I'll keep it brief, and I was just trying to do a little study on crude oil's reaction to wars of aggression. The red lines, the red text, that's Russia, and the green is the United States. And obviously, I mean, there's a few caveats. Number one, this is after the unipolar moment of the 90s, so no Crimean Wars 1 and 2 on the chart. Those are Russian wars. And caveat number two, probably the most important one, is the number of observations here is extremely limited. So I don't know, I'm hesitant to make any sort of conclusion here, but it's just funny how when Russia invades somewhere, crude oil prices tank, and when the U.S. invades or does something, with the exception of the Gaddafi stuff in Libya with Hillary Clinton in 2011, oil prices tend to trough. But again, limited observations. It's just food for thought. Food for thought, my friend.
Totally. I love that. The world needs more food for thought. There's just a lot of, you know, um, chart crimes, in my opinion, going around the Twitter
Too
right
many.
now.
Too many these
So
days.
many. Rick, you also brought along this chart of just looking more short term since this weekend, looking at what has happened. And, for me, the biggest observation has been the ripper we've seen in the dollar and
Big
crude
time.
oil since this weekend's news. But any
No
other
big.
takeaways for you?
I mean, yeah, bonds down, stocks down, gold down, all since Monday's news event. I mean, we call it a news event, but it's really the start of a new war, probably, in all likelihood. So everything's getting sold, a bit of a liquidity event, and the dollar's ripping. And it printed. But what's interesting to me, and I wrote about this for the currency report last week, is the fact that it printed 4-year lows right back in January, but it failed to get any follow through. And then we saw the rug pull in silver, and then I started to see hundreds of EEM spy charts on Twitter, and I'm like, oh my god, no. That's when I started to get worried. It was after silver, and then I started to see so many people post about emerging markets. After they were already up, 150% or whatever. I don't know. It's just welcome to the pain zone.
100%. Jason, has anything stood out to you Just from a tape reading perspective, short term. I know that's not really your style. You are a systematic, longer time frame kind of guy. But I know whenever this Venezuela news hit the wires, you came on to the morning show right here on Stock Market TV and called the bottom for crude oil to the very penny. Well done, sir. So I think everybody wants to know what you are seeing because you have a hell of a track record.
Well, it's a current market environment. For me, everything goes to environment. Even looking at Rick's last chart, it's like, what environment were we in during these periods of time where the war situations happen? Is the dollar strong? Is the dollar weak? This is a great chart that just kind of highlights where we're at currently. And so looking at, bonds, like bonds caught a little bit of a bid. I made that joke 30 times this week, so I'm not going to make it again. Don't worry, Sam. But anyways, everybody gets very excited when bonds catch a little bit of a bid. Everybody does. And once again, it just kind of came off pretty quickly right before it hit a new 52-week high. It's done that many times. And then look at gold, another, we could call it safe haven. Really, it's a risk on currency in a way, a risk on asset in another way. So kind of looking at that safe haven during certain periods of time, I would say yes. But looking at it currently, it's like gold is kind of in this zone where it's kind of coming around to this double top, kind of struggling a little bit, but doesn't look bad, and then let's look at stocks. Stocks are not looking great, but also we're looking at the index. So at an index level, what are we seeing? Well, we're seeing very heavy weightings in technology. If you look at the S&P 500, you look at consumer discretionary, you look at XLK, which is technology, you look at communications, which is things like Facebook and Google. All basically technology is over 50% of the S&P 500. A lot of those sectors have been getting hit pretty badly currently, especially the big names and the Mag 7 names. And then if we look at the dollar, where's that money going to go to? Well, right now it's saying into dollars currently. And we're seeing a little
bit. The dollar is the only safe haven, right?
I mean, I don't know. To me, the dollar is not a safe haven because it's more of a, like, it makes you feel good as it's a safe haven. Like the dollar, if I put all my money in cash, am I actually safe? It sounds safe. It feels safe. But at the end of the day, it's not. Think about, there's a reason why, there's rich people and poor people. Rich people put their money in assets. So if they have their money in assets, houses, gold, stocks, and so on, this is going to go up over time and outpace inflation. If you're on the lower end of the spectrum, middle class, poor class, working class, whatever you are, a lot of those people put money into dollars. And so you're looking at your bank account, you're holding your bank account, feels very safe, feels very good for you. But at the same time, you're getting rotted and killed by inflation day after day. So, overall, what exactly is the safe haven? Here's a hard thing to say and a hard thing to talk about. Sometimes stocks are the safe haven. Go back to 2020, there's inflation, there's a lot of things going on, even go all the way back to the 70s. Stocks didn't do shit for years. They just kind of went sideways, did nothing, but they were safer than holding your money in US dollars at that point. The markets just rotate over time. And I think that rotation has continued to be into hard assets. I still like energy. I think energy is still a great place to be. I think the agribusiness sector looks great. I think metals look great. Little bit extended. We could, you could definitely say that, but at the same time, it's like, what's holding up best? And I don't want to go in and start buying things that are crashing a lot because it makes me feel good. Like, this isn't grocery store shopping. At a grocery store, I'm going to look for the product I want. Let's say you want organic bananas. You go to the grocery store, you're not looking for the most expensive organic bananas so you can buy the breakout. You're buying something that's affordable and the type of banana that you want. In the markets, it doesn't work like that. You have to have the ability to continue to buy strength. And the strength has continued to be in these hard asset sectors. So I'm going to stay there. I think it's a much better place to be. Yes, a lot of things look like they're bargains right now, but usually things that are cheap for a reason.
I think the US dollar looks like a bargain down here. I was on a call with you guys earlier today making the case that, for years, energy and dollars have traded together, but we've seen a massive decoupling between these two trends over the past, few weeks, really. Do you guys think there's any potential here for the dollar to catch up? I know, Rick, you have a great feel for the currency markets, Jason as well. So I'm really curious what you guys think here.
I mean, I brought this chart along showing how the energy trade, and I know you guys have a running bet on this dollar in energy, and here I'm equally weighting crude oil and energy stocks, just calling it the energy trade broadly gives us a better look with dollars. And these have been trading, tick for tick together for the past, 3 years or however long it's been, 2.5 years. And they started to decorrelate really during the post April. We saw energy up, dollar down, and they kind of did a little back and forth, and they started to decorrelate again, which would be normalizing, right, Jason?
Yep.
But then January, and again, going back to that 4-year lows in the Dixie, failed to get the follow through, and it ripped higher, and energy ripped higher. And I think they're starting to correlate again. And I mean, it's painful. It's painful.
See, here's the thing that I think about it. Can Sam be right? Here's a scenario for Sam to be right in this trade. So, meaning the dollar and energy goes together. That's a really, like, especially down here, let's say we're already above 100 on oil, and then they start to correlate together. That would make some sense. Down here, it means the end of the oil and the energy trade to me. And what I mean by that is that when you see that correlation kind of come in, it means people are running to a couple things that they think are safe currently. Either that's a war scenario where they're like, oh my God, and we are in one currently, where they're like, oh my gosh, the only safe haven in the world is the dollar, but I also know energy is going to go up because this war is going on. But this usually leads to those blow off top scenarios where you have energy then fall on its face. And then the dollar continues to rip straight through it. So that's how Sam could be right on this scenario. Currently, I'm looking at it as in this is a trend, a mega trend in energy that's just beginning. So we see this move starting in energy. There will be pullbacks. There will be periods of time where the dollar goes up and starts to hit it. But over the long run, I think that trend is going to continue in energy. And then the dollar is just going to continue into this downtrend as long as the yield curve stays the way it is. It's still in a bull steepener. There's still liquidity coming in the market. People keep talking about how there is no liquidity. There is still liquidity out there. The Fed continues to hold rates where they're at. And especially with oil moving up, yields should continue to move higher on the long end of the curve. Not talking about short end where the Fed's at, talking about 10 to 30s. So as those are heading up, we're going to see that yield curve continue to steepen, more liquidity continue to come in the market, and the dollar continue to be under pressure. So my thought is that at the moment, I think the dollar is going to continue to make lower highs and probably continue to move down. Maybe it gets above that 100 level. I hate even numbers. I think that's a ridiculous thing because the market doesn't think in even numbers. But at the same time, it's a very significant level that there's a lot of confluence here currently. So for me, it's around 100, 101. We start to really sustain up there. Then I'm going to say something different. But at the same time, I think this is probably just going to head lower. I think this is a continuation pattern. I think we're just coiling under support. And if we do get a little throw into the pain zone, as Rick has labeled here, if we get a little throw into that pain zone, I think that turns into the market being under a lot more pressure, a lot of crazy things kind of happening in the market. And then that will probably end very quickly. I would assume like the Fed will probably come in, people will probably come in. There'll be a lot of things that happen to push the price of stocks higher and the dollar lower.
I think if we, that's a great point. And if you go to slide number 5, because you're talking about that washout almost, I brought a chart over just showing the VXEEM and VXEFA are just the respective, the VIX basically for EEM and EFA. They're a little bit obscure, but they get the job done. Right now we're seeing synchronized spikes in, across the board. I could have even added the OVX, which is the volatility index for crude oil. I know you guys know that, but
it's not something I track very closely though. So it's really interesting that you bring these charts. This is what I'm telling you guys. Rick looks at the most obscure charts out there, but they're super valuable. Like this is an amazing chart right here.
It's all information at the end of the day. And we got these big VIX spikes. I know that's something Phil loves talking about. And he's right. You got these big VIX spikes near lows. Right? I'm not obviously calling for the low to be today, but we are seeing the highest readings across the board since April for most asset classes, right? EM, EFA, SPY, but also OVX. And I could probably look at a chart of gold or silver volatility, and it would paint a pretty similar story as well. So I think we're closer to the end of the correction than most might expect. Wouldn't be surprised.
Totally. And if that happens, I have a hard time thinking the streak in energy is going to continue. You know, a lot of this money that's rotated out of, mega cap tech and all kinds of stocks out there has rotated very aggressively into energy so far here in 2026, as energy as a sector has been up for 11 consecutive weeks, which we've never in history seen before. So, um, I still think energy is going to be the best performer in 2026. I don't know if you guys think differently, but over the short term, it definitely seems due for some type of corrective action, as it's just gone vertical here ever since breaking out above this 2014 peak.
Yeah, so on the same subject, Sam, we got a question from DPS. Major oil ran up before crude. Do you see the trend continuing, or do you see commodities outperforming the stocks? So do we see, this mega trend that we are seeing to me, this is right at the beginning. You know what this reminds me of? When Sam and I were first talking about gold first started breaking out, gold starts to move. Everybody around 2,500, 2,600 was like, this is a bubble. And I'm not even kidding. Like, people were like, this is a bubble.
Sounds so funny to say that out loud today.
Yeah. But it's like back then, that was what everybody thought. Everybody thought this is a bubble. This is the end of gold. The miners didn't even really move yet. I think AEM did, and that was about it. Silver did nothing. Platinum did nothing. And so, we talked about this a lot, like arguing the fact that this is early. And I think the same thing here for energy is this is early. Now, granted, you're a very short-term trader. Sure, you're going to get on here, maybe buy this and see a pullback or whatever. That's going to happen. But in the long term, this thing could hit 100. This thing could hit 150, over the next year or 2 years. That wouldn't be impossible for me to see. And a lot of the times when people see things like consecutive weeks up, they start to get in that terminology that, I hate, Sam, which is overbought. I hate that term.
Yeah, there's nothing bearish whatsoever.
There's nothing bearish about overbought.
Demand than supply, but, over the short term, probably not a great place for an entry.
Yes. So as we're getting that, sure, there can be a pullback, but you never know. Most of the time, every single breakout that you're ever going to buy that's worth a damn is going to be overbought. Every time. Every single breakdown that you're going to sell is going to be oversold. The short I did in 2020 to short oil, that was extreme. It was a huge oversold reading before the breakdown even happened, because it had a little breakout at one point at the beginning of 2020. Then it came all the way back down and then broke down and went. And the breakdown was actually at $50, and it went all the way down to, as people know, negative prices in the front.
What did it hit? -50?
Yeah, it hit -50 in the front month contracts. Yeah. So I mean, there's room to run when these things hit something. What Sam is showing here is that this has a lot of people interested, a lot more buyers and sellers currently, meaning that this could last a lot longer than people think. Remember this one, guys. Sam has highlighted gold and how many months it's been up for a very long time, and it was the most months up in history many times so far. It's still up every single month. What are we on? 14 months currently?
14 consecutive months up for gold futures.
So who knows exactly how crazy this thing looks, where it has 40 weeks up at some point on energy. That would be possible. So I'm just saying, don't think where this thing's going to end. Just continue to ride the trends as they come, continue to get out of positions when the trend changes. But for now, this still looks really early. And I think that, to answer the question, I think that you can buy either one, right? This is the thing. Me in futures, I have leverage on, oil, heating oil, and so on. So I'm going to make a lot more money probably there than in buying the individual stocks. But there's also, if you're only trading the ETFs and the stocks, you're probably going to make more money in the stocks currently.
100%. As Wavy points out, crude oil up 41% so far here in 2026, and we are just entering March, guys. I have a feeling we're gonna see $250 crude oil, sometime here before you know it. And it sounds really ridiculous. It sounded really crazy to say gold to 5,000 not long ago, but boy, these assets can move fast once they start to trend All right, so we have, yeah, I think this is another chart we need to cover here, guys. So energy relative to bonds is the black line here. You can see that's ripping to new all-time highs. And then you have the red line, which is the 30-year yield, which you can see has not broken out yet. But over longer time frames, these two lines are nearly identical. So, Jason and I have been talking about this for a long time. We're seeing yields break out, especially at the long end of the curve around the globe. Germany, a ton of these European 30 years have broken out to new cycle highs. Of course, there's the Japan situation, but the US has been very stubborn and refused to break out thus far. But man, with energy ripping, I think this breakout is coming sooner than most people expect in the 30-year yield.
No, this is a great chart. Rick, this is one of yours, I assume?
Yes.
Yeah. So this is a great chart. I absolutely love this scenario here because to me, this is the simple way of looking at it is that yields are most likely going higher. XLE is most likely outperforming TLT. It would be surprising to see that go any other way. And I think a lot of people will probably continue to say, well, the Fed, well, the economy, well, this, well, that. The problem is that inflation is one of the biggest predictors of where yields go. Too many people get into like, oh, the GDP growth, all these things. It's important and it does factor into it. But at the end of the day, it's like this is a thing that's important to know about inflation. Inflation covers up a lot of bullshit. And that's a very technical term, so I'll explain a little bit more. But inflation, like if you're looking at a company and you're like, oh wow, they have really great revenue this year, they're making more money than ever. Sometimes that's just inflation. If you're looking at even a couple years ago, you see EM moving nicely, and then the United States, we really didn't have much growth if you really look through the exact numbers, but enough sticky inflation, it kind of covers up basically everything that would have said we had no growth. So this is kind of a scenario I think we're still going to continue to see where it's like, hey, we have a little bit of growth, everything looks okay here, but inflation might continue to get out of control. And really, what's the biggest input for inflation out there? Well, it's oil. It's in everything. So if we're seeing oil start to move up, that's the last piece that didn't move up. Everybody was like, well, commodities aren't doing anything. They look at the CRB index or something, great index, but it's heavily in energy like oil, heating oil, and gasoline. And as long as it's not registering any of that moving up yet, we're not going to see inflation really tick up that high. Now we're finally seeing that next level where diesel fuel. I mean, I just saw a gas station. Diesel fuel is $5 in Ohio. A couple weeks ago, it was $3.25.
I think it's still around $3.25 where I'm at.
I'm sure in Kansas, but that's the other thing. It takes time for that to get through the system, depending where the shipping routes are and what's the states that usually move the quickest. Things like California, things like Ohio, they're actually having a lot of supply problems in California as well. So the prices there are going up a lot higher for diesel fuel. So, if you see those inputs continue to move higher, we're going to be in a situation where inflation numbers, not the inflation that we're seeing. Like I can see inflation's moving higher. You guys can as commodity traders. We can all see these things, but the difference is we can't get into the weeds here until we start to see it show up in the CPI report. And that's what the normal people are going to be looking at, the CPI report. But I think this year is the year where that's really going to tick up, and that's going to put a lot of pressure on bond yields to move higher. So this is a great chart. And I think this is going to follow energy for sure.
Totally. Great take there. Rick, before we run, I wanted to get to this fertilizer stock, fertilizer chart that you brought along because, man, some of the best bull market vehicles in energy bull markets are these fertilizer stocks. So tell us about these. You have the two majors here, CF and MOS, but I know there's a lot more out there. So what has your attention right now on fertilizer?
There's a whole world out there, and we had a great question in the chat by DPS 888. 888 is also a funny number. It's the one that Nick Leeson used to blow up. What was it, Barings Bank?
Yep.
Back in the day. But, I digress. He's asking, why are some of the nitrogen fertilizer stocks running like CF? And the simple answer is fertilizer and energy, as you alluded to, Sam. It's the same exact trade. There's no denying that. But the technical reason is, well, natural gas is the main feedstock in ammonia and nitrogen, ammonium nitrogen fertilizer production. It's the main feedstock, like 70%, upwards of 70%, right? So basically, it's what they use to make it. So that explains a lot of that. And Mosaic's having some, idiosyncratic company-specific problems, so it doesn't look as good as the CF right now. CF looks incredible. It's breaking out of it's looking to complete a massive base going back to 22, and we're in a funny market where energy's leading, fertilizer stocks are leading, everything else is lagging. Almost reminds me of 22, right?
Eerily similar, yes.
Right, with the dollar too. I mean, there's plenty of similarities there. Probably more differences than similarities, but again, crude oil futures breaking out at the same time that fertilizer stocks printed a double bottom and started to trend higher. And this is a phenomenon across the world. It's not just U.S. based fertilizers. This affects, and I brought a chart over for Yara International. Should be the next slide. This is a Norwegian fertilizer stock.
This is what I'm talking about, guys. Who else out there that is looking at Norwegian fertilizer stocks?
That's what I'm saying. I mean, again, if you want to play it against that $30 level, which again is a huge polarity level, it's not just because there's a Fibonacci retracement there. The market's told us on plenty of occasions that there's sellers there for whatever reason. But you also have the 50% retracement, not very much used around these parts, but still look at it from time to time. Coming in at 25, if you're absolutely desperate to get some international fertilizer exposure, this is probably one of the better names. I think it's green today. You also have the Braskem BAK out of Brazil. They also operate in Mexico. That chart is going insane. Got filled this morning, but yeah, there's plenty of opportunities there. It might not be the prettiest, might not be the sexiest, and the rest of the portfolio might not be working as well either. But there's still opportunities out there. There's ways to make money.
100%, Rick. And we're covering it all here at All Star Charts Gold Rush with our currency reports that you do. You put together amazing reports every single week. We also put together precious metal notes, commodities, bonds. We cover it all, and we have all the trade ideas there. I'm sure we'll be covering some fertilizer stocks in the coming weeks. So if you want to learn more about All Star Charts Gold Rush, you can click the link in the description to check it all out there. And I just wanted to thank everybody in the chat. We had a very good chat today. Thank you all for coming out and supporting us and hanging out with us. I wanted to acknowledge this comment from DPS that Rick should donate some eyebrows for Sam's forehead. I couldn't agree more, man. I was on here last week by myself. Somehow it came up that I got a haircut and my forehead is huge. Like, my siblings love to call my forehead a six head. It is what it is. I've come to terms with it. I'm at peace. I have a giant forehead. It's okay. But Rick,
Sam is just smarter than the rest of you, and that's really the truth. Yeah.
I wouldn't mind some of the eyebrows, Rick, though. I mean,
no, I
sure.
appreciate it, guys. I appreciate that. Girls used to ask me when I was younger if I did makeup on them. My eyelashes too. They were very jealous. That, they're all natural. It's just the Lebanese genes, bro.
Nice.
Can't escape it. Thanks for having me, guys.
Awesome. Thanks for coming, Rick.
Thanks
I hope
for
you'll
coming
come
on,
back and hang out with us more often here on
think I will.
Gold Rush. So everybody, thank you for being here. We will catch you again at the same time, same place next week. Until then, adios.
Later, guys.